Hey, and welcome back to Japanese Trading Systems. In this second class, what we're going to be doing is we're going to get into how we actually start interpreting those individual components of the Ichimoku cloud system. So here's our agenda for this lesson. We're going to look at the key signals, each of those components, the historical component, the future component, and of course the current component. They all give different signals. So we're going to start to break down each of those signals, kind of get a framework for that, and then we'll talk about interpreting the data. All right, so let's start talking about the key signals. Now, as a quick pre-frame here, all of the signals that you get in the Ichimoku system, they're kind of familiar to you if you've been trading. Now, if this is your introduction to trading, it's probably too advanced to start here, and you probably should go back to Foundations of Stocks and Options. But if you've been through the Foundations of Stocks and Options program, then all of the signals you're going to learn about, you're familiar with the concept. What we're doing here is we're going to learn a different way of looking at some of that data, and you're going to learn the new ways of getting some of that similar information, but from this different perspective and this different picture, all right? So that's what you're going to be learning as we go through these different components and the different signals that we get. Now, each component of the Ichimoku system provides a variation of some of the similar information, but of course the difference here is that one component is historical, one component is current, one component is in the future, so it's the future component. And what we're going to do is we're going to go through each of these components, we're going to separate them, and then we'll come back around and we'll combine them. So for a few videos here, you're going to feel like you're kind of wading through some information. That's because we are. We're going to be breaking each of the components down, and then later we'll come back and we'll pull it all together. So let's get started, and where I want to start is I want to start with the future component. That is the Senku A and the Senku B components. This is the components that we consider the cloud part of the Ichimoku system here. So remember, this is called the cloud. This is the future part of the system. In other words, the information we get from the cloud is giving us some forecasting of what we expect to be happening at some point in the future. In the cloud system here, with the cloud component, I should say, the current price is compared to the Senku from 26 days ago. Now, what do we mean by that? Well, since we've taken the Senku, we've taken those two lines and we've shifted them forward 26 days. Remember how the Senku is composited. We take the formula, the different averages or the 52 period, and we shift it forward. What we're doing is we're actually looking currently at today's price against the Senku from 26 days ago, because the Senku is 26 days in the future. So the one that we see today is actually from 26 days ago. All right, now the future cloud, the stuff that is being drawn in the future, that is today's Senku, of course, shifted forward 26 days. Let's take a look at this chart, and you're going to see what I'm talking about. Notice we've got a candlestick right here. That candlestick, if you go straight down, that is compared to the Senku from 26 days ago. Okay, that is the present cloud. That is the cloud that you're seeing right now. That is 26 days ago Senku. And then over here on the right side, 26 days in the future, that is the future Senku. Okay, so that is the Senku that's been drawn into the future. And I know that terminology might be a little bit weird here, but just think about it this way. Senku is being drawn in the future. That is the current Senku, current, it's happening in the future. And then today's price, we're looking, if you look straight down vertically, you're looking at the Senku there, which is compared to what it looked like 26 days ago. So the data that we get 26 days from now, if you look over here on the chart, whatever shows up, whatever candlestick information shows up then, will actually be being compared to the Senku of today, which is actually happening 26 days in the future. So, I know it's kind of mental gymnastics there, but that's the way that it's being drawn out here. Now, let's look at the way we interpret this information. The bullish zone is the section above the cloud. So if you're above the cloud, it's bullish. This is really simple. It's almost like moving average basic here. If you're above the cloud, it's bullish. If you're below the cloud, it's bearish. Now, what happens when you've got price action that is in the cloud? What happens when the price action gets into the cloud? Well, this is when we are in a correction or a consolidation, however you choose to term it. But in this particular case, if the price data is in the cloud, then you're neither bullish nor bearish. You're bullish in the cloud, even though you may be correcting. You're bullish if you approach it from the top, and you're bearish if you approach it from below. So where these statements come from, you realize the philosophy that a trend is still in effect until it's given definite signals of reversal. So the assumption is if it retraces into the cloud, it's still a bullish trade, it's still a bullish trend, but we've corrected and we're back into the cloud, and we're looking for some sort of a breakout for a continuation of that preceding trend. Now remember this is a direct correlation to that old Charles Dow statement: a trend is assumed to be in effect until it's given definite confirmation of a reversal. This is part of Dow theory. It's one of the core tenets of technical analysis, and the Japanese have discovered it as well. And so I hope you understand that principle here. When it corrects in the cloud, it's consolidating, it's correcting, but the preceding trend is assumed to be in effect, so we think it will eventually continue. Now, that doesn't always happen. Just because it's in the cloud doesn't mean you want to just go buy the trade, but you're looking for a continuation out of the preceding trend there. All right, now let's take a look over here and notice how when we approach from the cloud, it is still bullish, and oftentimes you still get a bounce in here. In this case, all of this was correction here. All of this was correction that I've drawn in here, but it was still kind of predominantly bullish, even though it was in the middle of a reversal. Now watch here. Once we get below the cloud, we're into bearish territory. And then, of course, when we're above the clouds, we are in bullish territory. Now, the cloud being red or blue at this point does not matter. Remember, all the red or blue indicates is that the Senkou A is on top or on bottom. But what we're looking for here is the price action relative to the cloud. So pulling all this together here really fast, if today's price is above the cloud, you're bullish, and today's price is being compared to Senkou from 26 days ago. So it's the cloud from 26 days ago, and if you're above that, then you are bullish. That's the way that we're looking at that. And if you're below it, then you're bearish. Now, let's also learn about the support and resistance signals that we have inside the Senkou here. The entire cloud is going to function like a support and resistance. This is very similar to the moving average system that you're probably already familiar with. Remember, moving averages function as support and resistance. Well, so do the clouds here. So what we've got is the clouds are basically a moving average variation shifted forward, and when we are above it, we're bullish. When we're below it, we're bearish. And if we retrace into it, that whole section becomes part of support and resistance. If we are above the cloud, we are said to be floating above the cloud. And if we're below the cloud, then we're said to be in the shadow or below the shadow of the cloud. Now, a flat Senkou B is a support and resistance in the future. And I'll show you in a chart here what that means. A flat Senkou B is a support and resistance in the future, and the longer the flat, the stronger the support or the resistance. Let me show you what I'm talking about here. Look at this picture. First, let's quick reminder how Senkou B is formulated here. We take a 52-day midpoint average and we shift it forward 26 days. So since it's the midpoint of the last 52 days, you're going to end up with a lot of flat lines, because in a 52-day trading range, you'll have a lot of consolidation in there a lot of times. So take a look over here, and you're going to notice that the Senkou B very often gets into a long line. First of all, let's look at the support and resistance areas here. Notice how we retrace to the cloud area, and the cloud is functioning as support. As long as you're above it, it's functioning as support. Now, once we're below the clouds are working as resistance. We're in the shadow of the cloud. Now, once you bounce back above the clouds here, we are floating above the clouds, and again, it's functioning as support. So you see how that's working there. Now, let me show you that Senkou B and that support. Look here. Notice how those lines get going flat here. That's because out of any 52 days, you're going to have an average there where the midpoint stays the same price. And so every time you see a Senkou B line that goes flat, that becomes a future potential support or resistance. And they work really quite well. Notice here, this section right here where I've drawn these arrows, they worked exactly perfect on the bounce back up in here. That was exactly where support and resistance showed up. Same thing happened here. Once we were below the cloud, we had some Senkou creating some resistance. That's exactly where resistance showed up. And of course, we haven't seen the right side of the chart yet to see if that support works on the way back down. But these are a way that you start constructing some support and resistance based off of what these clouds are showing us here. Okay, so now what we've seen is we're above the clouds or below the clouds, we're bullish or bearish. We've learned that the cloud is support and resistance. We've learned that Senkou B creates a future support and resistance. Now let's talk about cloud thickness. Thin clouds and Senkou crosses, let me underline that. Thin clouds and Senkou crosses give rough timing data in the future, and there's a key phrase, in the future of when markets may change direction. So we've got clouds that get thick. When they're really thick, that is not a high probability that this thing is going to be reversing at that location. But when they thin out and when the clouds cross, there is a potential indication that that's where, in the future, the price action will be crossing over. So we'll look at this with some charts here. Thick clouds identify areas where consolidation is likely. So there's two distinctions here. Thin clouds identify areas where reversal is likely. Thick clouds identify areas where consolidation is likely. And here's the key principle here. The thicker the cloud, the more difficult it is to reverse at that price point. The thicker the cloud, the more difficult. So let's take a look at a couple of examples here. And again, I know I'm just kind of dumping data at you right now. We'll look at a lot more examples. We'll start to kind of ingrain this more. I'm just trying to get the key principles out for you to understand at this point. So again, let's look at this picture here. Notice the thick clouds right here. Okay, so first thing here, we had a very thick cloud. You see how thick this kind of bluish purple cloud is, and that's exactly where we ended up consolidating in the future. Now look down here, we started to get into some thin clouds, and by this point we were moving into some bearishness. Now look here, we have big thick clouds here. These are forecasting potential consolidation, and sure enough, that's exactly where we ended up consolidating in the future. I think that's quite fascinating here. And then if you look over here, we've got a little cloud crossing over here, and that's exactly where the crossout started to take shape here. So these clouds, you're going to have to kind of work it a little bit. We will go back and do some back trading, and you'll get better at this. But the thicker the cloud, the more likely that area will be a consolidation. The thinner the cloud, the more likely that somewhere around that area is where we'll actually start to see the reversals starting to kick into play. All right, now let me give you kind of a chart here that you can reference. And this is just kind of a quick directional signal understanding here. So when Senkou A line is going up and the B line is up, it is considered strong bullish sentiment. When the A line is up and B is flat, it is medium bullish sentiment. When the A line is down and B is flat, it's weak bullish. When A is down and B is down, it's strong bearish. When A is down and B is flat, medium bearish, and A up and the B line is flat, it is a weak bearish. You can just kind of look at that chart. You've got it there in your notes. You can kind of look at that and compare it to the charts and kind of start to synthesize that data in here. Let's look at a couple of examples and hopefully bring some clarification to this. So look at this picture here. And notice we've got the Senkou A line going down and the B line is flat. Well, that qualifies as medium bearish. And sure enough, at that time, if you look back in history, we were somewhat bearish during that time. Okay, now if you come over here, you had two lines going down. You had Senkou A and B going down, and that says that's strong bear. Well, if you look back, sure enough, that's exactly what was happening. So what you're seeing here is the cloud is helping predict in the future. If you come over here to the right side, currently on this chart, it says strong bull is what's starting to form up here. So the odds are that in the very near future here, possibly the next 2 or 3 trading sessions, this is going to start to take on more of a strong bullish stance here. And I just want to bring some clarification here. The cloud, in these cases, these lines here, they're helping predict the future. We're comparing today to what the cloud was 26 days ago, but what the clouds are actually helping to show is what is coming or what is likely coming. So in these cases, these are, if we could shift it back, and it does take some mental gymnastics, but you look here and you look at this strong bear. We'll go back 26 days ago, that's where this was happening, and sure enough, we had a really good move here on the Canadian dollar here, and during that move, we moved a few hundred pips here in just a couple of weeks. Now, if you come over here to weak bear, well, shift that back and you're in the middle of weak territory. So it was still somewhat bearish, but not really. It was starting to weaken up here. Then you start looking over here, strong bull. Well, where did strong bull happen? This happened 26 days in the future. So you come back over here and you say, yeah, sure enough, that was shaping up into a strong bullish trend. So realize that the cloud is actually helping to predict the future here. And again, we're going to have to go back and play with this a little bit. We will do some back testing in some future videos, but I just wanted to kind of bring some clarification to how these signals look and that part of the cloud is helping to predict the future.